Hello and welcome to this special broadcast of Medicine Box. Today we put focus on the hospital sector. This sector has seen a rise in M&A activity this season. Ekta is here standing by the big wall to take us through the latest deals that took place in the hospital sector and the rationale for the surge in valuations. Ekta.
Thanks for that. Well, yes, the hospital sector is abuzz with deals, from Singapore PE fund Temasek becoming the majority stakeholders in Manipal Hospitals after buying an additional 41% stake for around 16,400 crores, to smaller deals such as Fortis picking up a 350-bed hospital near Delhi for around 225 crores. Other deals in the offing could be Abhay Soy-promoted Max Healthcare picking up TPG-run Care Hospitals. An Economic Times report is pegging valuations for the deal at anywhere between 5,500 to 6,500 crores. Other deals in the offing include Manipal itself buying the hospital chain of Imami Group, AMRI, for around 2,400 crores and picking up Kerala-based private hospital chain KIMS for around 3,500 to 4,000 crores. Acquisitions are done for various reasons, from increasing the geographic presence to accessing pan-India multi-speciality bed capacities quickly. For example, Fortis, with the acquisition of Meteor Hospitals, will be propelling to become the second largest hospital with bed capacity in Gurugram. It will fulfill its strategic approach of expanding in the Delhi NCR geographic cluster. On the other hand, Manipal could surpass Apollo Hospitals by increasing their bed capacity to over 10,000 beds in case the said acquisitions go through. And Max, which has over 3,400 bed capacity, will access 2,400 beds from Care Hospitals, helping it achieve targets of increasing its bed capacity by over 2x in the next 3 to 4 years. The common thread amongst all these acquisitions is cashing in on the structural growth drivers, hence many are ready to pay top dollar for these acquisitions. Valuations for the hospital space have risen as much as 8x in the past 5 years, with deals such as Manipal Temasek done at 10 times MCAP to sales, which is a premium of 5 to 6 times versus peers. These structural growth drivers include increased health awareness and insurance penetration post-COVID-19 and increased inflow from international patients as India positions itself as a medical tourism hub. All this will help aid the operations of the hospitals. For example, average occupancies in the hospital space are expected to go from the current range of 65 to 69% to over 75%. Average occupied bed rates could rise by around 10%. As far as medical tourism goes, it has risen 30% from 2014 to 2019, with currently many of the large hospital chains seeing business revert back to pre-COVID-19 levels. Estimates are the number of medical tourists could rise to 3 million by 2030. Lastly, why acquire? Today, building a hospital requires a capex of around 1 to 1.2 crores per bed over and above land acquisition costs and other costs, resulting in a time frame of up to 3 to 4 years to even come on stream. Acquisitions are cheaper and more cost-effective. Acquisitions, hospital owners and analysts say, is cash accretive from day one due to the immediate and fast without capital to invest and build. All this hence aiding cash management and possibly even justifying the valuations. In fact, we have with us Viren Shetty, who is the Executive Director and Group COO of Narayana Health, and we have with us Dr. Ballal of Manipal Hospitals joining in now to discuss all of the M&A activity. Gentlemen, welcome to this discussion. Dr. Ballal, I'm going to start this discussion with you, considering that Manipal has really been in the news in the past couple of weeks. Give us the reason why Temasek was so interested in Manipal. What was the reason for the acquisition and the kind of premium that you all also got?
Good afternoon, Ekta. Thank you for having me here. Good afternoon, Viren. I think we are in a very exciting period. M&A seems to be the flavor of the season. Temasek is not new to us. They have been our shareholders for quite some time. They have been on the board too for the last 6 or 7 years. And they have seen the practice of medicine grow significantly in the Manipal sector. And they are very, very comfortable with what Manipal is. And I'm sure that's one of the reasons that they've invested in healthcare. in addition to the belief that healthcare is sort of going to surge ahead, and the setback that was there during COVID, I think we have overcome that. And we are looking forward to a very healthy growth in the future. I think our familiarity, our culture, and the future growth of healthcare is what Temasek saw in us.
Okay.
Right.
Sorry, Viren Shetty is also with us. He's the Group CEO of Narayana Health. Viren, do you see a lot more deals in the pipeline now? I mean, there's clearly a lot of interest in this space. And as Ekta was pointing out, perhaps valuations are also looking good. Assets are there for the asking. What is your own view on what the size and scope of these deals could be in future as well?
There are a lot more deals that will come about. And as you said, the valuations are looking good for the seller. For the buyers, of course, these things tend to be quite expensive. But I guess institutions like KKR, Temasek, Carlyle have all done their homework, and they figured that there's a lot of opportunity to make back the returns from how much they're investing in making these expensive acquisitions.
Right. Recently I put out a piece comparing hotels with hospitals in the sense that both their businesses are similar, where you have to obviously put up a facility and thereafter you earn off occupancies, with the obvious difference being that hotels is cyclical, whereas hospitals is a lot more structural. Dr. Ballal, I just wanted to understand your thoughts on, have we moved up in the structure of return ratios and businesses for hospitals, from a business standpoint over the next 5 to 6 years?
I agree with you. I think there's a lot of advantages of acquiring the chains of hospitals rather than greenfield projects, which take a very long time to start making money. So there's a significant advantage of acquiring large-scale hospitals. And what we have seen is a steady growth of at least 10 to 15%. And we should actually look at the growth from 2019 onwards, because 2020, 21, 22 were retarded growths due to the COVID pandemic. But certainly all of us are growing at a healthy level, and we do believe our occupancies will go from 60 to 65% to about 70 to 75% in the future. And I think acquiring hospitals is probably the better way of doing business. However, we are also looking at many greenfield projects, mostly in the places that we are already well established.
Okay. Viren, I just wanted to understand the premiums. For example, the Manipal Temasek deal was done at some of the heftiest premiums that we've seen in the hospital space, at around 10 times MCAP to sales. And if you compare it to its peers, the peers are still at anywhere between 4 to 6 times. Based on this expensive deal that's taken place, do you expect the valuations to become more expensive for further deals going forward?
Well, to be fair, that Manipal is a phenomenal hospital group, and it is a marquee brand in their key hospital. So it may not be shared by hospitals that aren't of the same caliber, but for hospitals that are, I would guess it would drive up the valuations, yes.
Okay. Just on that point, Viren, are there any distressed assets within the hospital space which are for easy pickings at this point? Because one of the trends that took place post COVID-19 was that the stronger players managed to emerge, and maybe the smaller hospital companies couldn't cope. So is that a type of trend which is also taking place?
Well, hospitals have been distressed even before COVID-19, and for multiple reasons. But the reasons these hospitals end up being distressed does not go away just because you get a much larger parent to take it over. Sometimes it could be location, sometimes it could be just spending too much on a building, sometimes it could be all kinds of regulatory issues. None of that goes away. And anyone that's looking to make a cheap acquisition of a distressed asset will end up inheriting a lot of the headache that came with the reason that hospital was distressed. So it's not always cheaper in that sense, or easier. It's just a question of how much time and money you're willing to commit in the pursuit of growing a large network full of beds.
I want to go to Dr. Ballal, but before that, Viren, at the end of the day, for someone who's watching our show, right, What matters is in the hospital space, if occupancies are rising, if medical tourism is back in a big way. And I'm sure, the M&A guys, the PE guys who are investing are expecting these trends to improve, and hence the future looks good as well. But you tell us, what are the numbers right now? Have occupancy levels risen? Has medical tourism come back in a big way? And what do you see as the way forward, say, over the next 12 to 18 months?
It's always hard to project how things work out in this sector. The fact is, there was a huge lag during the COVID time, and people were not getting elective surgeries done, which has bounced back. And with increase in general awareness about your healthcare, so a lot of people have realized that they need to get checkups done, they need to start taking care of their health more, and that ends up with them being active consumers of healthcare. But still, there is tremendous room to grow, because as a country and as a people, Indians are the least likely to seek medication, the least likely to access healthcare, have some of the worst health outcomes for people of the similar genetic disposition. And it just means that there is a large market for people who need to access healthcare that there is their right to. So regardless of the international expansion, regardless of how you look at it, people do need more healthcare, and hospitals are here to provide that so that they can live long, healthy and productive lives.
Right. People do need more healthcare. We've learned that during the pandemic more than ever before. But Dr. Ballal, just wanted to understand a couple of things from you. One is that is there enough supply of quality talent in the hospitals business? While, it's easy for everyone to go ahead, acquire companies, pay top dollar, acquire or build facilities so that there is enough infrastructure. But the soft skills of surgeons and good quality doctors, is there enough in the supply pipeline for the same? And secondly, where exactly does your deal with Emami stand at right now with regards to AMRI? Is everything done?
To answer your first question, Bet, I fully agree with you. I think hospitals are not just brick and mortar buildings and CT scans and MRI, PET scans, etc. It's really the human resources that make a hospital what it is. In the cities, it's certainly not a big problem of getting talent, because most of the qualified doctors, specialists tend to sort of gravitate towards the cities. And by and large, in the cities, we haven't had much of a problem. And so far, most of our hospitals have been in the Tier 1 cities, except our teaching hospitals, where it's a different ballgame altogether. So far, we haven't had too much of a problem acquiring talent because of where we are located. And also, most of them are about 250 to 300 bedded tertiary quaternary care hospitals. But it may be a problem in the future, because what we see is more than shortage of doctors, it's an inequitable distribution of talent. You go to a place 100 miles away from Bangalore, it may be very difficult to get a good surgeon, certainly very difficult to get a good transplant surgeon or a cardiac surgeon. So I think so far the problem has been manageable. And also we have the synergy of having a large number of hospitals, at least in some of our locations like Bangalore. The second is, you asked me about Emami. I would not comment on anything more, saying that we're in the advanced stages of negotiation, and hopefully you will know very soon.
Okay, well, that is definitely some of the statistics that we do need to improve. The doctor-patient ratio, the nurse-patient ratio across India. But I'm going to request Dr. Ballal as well as Viren to stay on. We need to take a short break, but we'll be back with more questions on M&A activity in the hospital space. Stay tuned.
Hey, कमाल की कार है ना? अभी लेने क्या?
सर कमाल
Hope you like them. Introducing Apollo Alpha. Add more thrill to your beast.
Welcome back. We still have with us Viren Shetty, who's the Executive Director and Group COO of Narayana Health, and Dr. Ballal of Manipal Hospitals joining in to discuss the hospital space in India and the kind of M&A we've seen recently. Viren, one of the trends which has also stood out within the hospital space is the interest from PEs within hospitals. We've seen deals such as Manipal Temasek, TPG Care, KKR Max, just to name a few, even the likes of HCG, CVC Capital. What happens when a PE firm buys into a hospital company? Because eventually they do want to exit with higher returns. So how does that affect the operations? Are we going to see more deals coming in from the PE front when it comes to hospitals?
See, PE funds chase yield more than anything else. They invest in sectors where they see some inefficiencies and underperformance, and they're able to increase the yield of the assets that they acquire, not just in healthcare, in most industries across the world. And the Indian private healthcare industry does owe a great deal of gratitude to a lot of the PE funds who first put us on this journey of become professionalized institutions, because I'll just speak from our own experience. Prior to us bringing in professional investors, we didn't even have a proper accounting system. We had no idea of how much material was coming back and forth. We had no idea of how to generate bills on time, how to collect them. And so that discipline of being financially rigorous is something that PE funds bring to every hospital that they acquire, and that is of tremendous value. But of course, beyond the point, you're looking at a sense of maybe diminishing returns, which case if you are buying in to a healthcare group at a very high valuation and you're looking to 2x, 3x, or 10x that investment, it would mean that you would have to be a little more aggressive in the way in which you run your operations. And that is fine to an extent, because a lot of aggression does come from how you expand, how you grow, how you add beds, and are able to project a view of the future that could square with the reality of a market like India, which is growing very quickly. So I would say that it affects the operations in that it does cause hospitals to be more cost efficient, to be able to offer more services to charge, and to be more aggressive in their growth.
Dr. Ballal, of course, on one hand, when PE investors get into a certain type of investment, they're looking at, tightening the ship or cost effectiveness, etc. But the other thing is structural growth drivers, right? And Ekta was pointing out a couple of growth drivers that the space is seeing, whether it's higher insurance penetration, pickup in medical tourism, which was missing for a very long time. But you tell us, going forward over the next couple of years, what do you see as the main growth driver for the hospital's business?
I do agree with you. I think private equity has contributed a lot to growth of the healthcare sector. We have particularly been with private equity for quite some time. And as Viren mentioned, I think there is certainly a much better management, tighter control of what's happening, and a more closer look of how the hospital is administered and how it grows. Everyone looks for return on the investment. So I think these are all needed for us to grow. The future, as I see, is one, certainly I think we'll have more healthcare awareness, hopefully more insurance penetration of bringing in more patients who require healthcare, and certainly more of medical value tourism. And hopefully at some point, there will be a percolation down of significant healthcare institutions to the tier 2 and tier 3 cities, which is bound to happen. Just like how it has happened with specialists, once a city like Bangalore is sort of saturated, we see a lot of specialists, nephrologists, cardiologists, so on and so forth, moving into other towns where there is growth. So I think this will be the pattern for the future. But I am quite optimistic that healthcare is here to grow, and it will grow significantly in the next few years. And it needs to grow in a large country like ours. And soon, hopefully, we'll be the healthcare givers for the world, like what the Western world was in the past.
Point well taken, Dr. Ballal. Viren, I just wanted to probe a little further on this. While healthcare needs to grow, are there any trends that you're seeing? A certain kind of hospital is seeing a faster growth, or is there a latent need for something which you believe can be a growth driver in the future? I mean, we are all talking about specialty hospitals, we're all talking about general care hospitals, but anything specific that you see as maximum growth potential?
See, there is demand for healthcare that will continue unabated. But the problem that happens is that there are vast segments of the population that are simply not able to afford the sort of treatments that are being offered. And so when we look at our expansion, there is a need for tier 1 cities. There is a different sort of hospital that you create for tier 2, tier 3, and even in the tier 1 cities, there are different payer groups that you're going after. More than growth of people who have insurance or people who are flying in from abroad to get very high-end treatment done here, the greatest need is for the middle class, the lower middle class, and the poor farmers of this country, for whom there still needs to be a lot more cost rationalization. There still needs to be a lot more efficiencies brought in from the private sector to be able to service that. So we see that as some of the growth drivers for our group, which we call and has been termed as the missing middle. And so they need insurance, they need healthcare, they need primary care, they need preventative care, they need lab tests, all at a price that is much lower than what is being provided, even in our group today. And so a lot of the effort that we're putting in is towards servicing that need. Now, it does not necessarily mean that we need to add more beds to achieve that we need to add too much more expensive infrastructure to achieve that. There is a lot of soft efforts that we need to do on our processes, on the way in which we discharge patients, process them, and the amount of throughput we can put in, that can help reduce our cost even further and take care of those patients. So we see a lot of growth coming from India.
I'm just going to interrupt and ask you, what's your plan when it comes to M&A? Are you looking to be acquired? Are you looking to acquire? Because Narayana has been relatively, I'm saying relatively, quiet as compared to the peers when it comes to M&A.
Yeah. See, all of this costs money. And who pays for it at the end of the day? It's not Temasek or KKR. They're just lending money to the hospital group to do its expansion and so on. In the end, these costs are borne by the patient. And unless the things that we spend money on improve the healthcare outcomes for them, reduce the cost, allow us to do more with less, it doesn't make sense for us to spend huge amounts of money towards M&A. Now, it's not that we don't do M&A, we do. It's a lot smaller, it's a lot more gradual. But the things that we are pursuing are the cost reduction that is desperately required in this sector.
Okay, cost reduction is the need of the hour in this sector. Got that. Viren and Dr. Ballal, pleasure speaking with you to understand what's happening in the business and what the way forward could look like. Appreciate your thoughts on CNBC TV18. Thanks a lot for joining us.
Very much.
Thank you.
That's all we have in this edition of Medicine Box. Thanks for watching.